Welcome to the show. Be the boss of your money. It's a show about investing, personal finance, borrowing, spending, budgeting, insurance. You name it, we talk about it so that you could possibly be better with your financial decisions and make for a better life for you, your family, and have a better future. I'm Mitch Goldberg with the wealth management firm Client First Strategy. We're talking about the stock market going up, Trump backing off Powell and tariffs, and why is gold and crypto so strong as of late? What does it mean? And I don't think it means anything good for the US dollar, but we'll talk about these. So let's roll the quick intro. And if you have any questions, please ask me in the comments. I'd love to see you there. And while you're watching, give it a thumbs up. If you're watching in the replay or in the live, no matter, give us a thumbs up, a heart, whatever reaction is available to you, depending on which platform you're watching on. Okay, here we go. Thank you very much for joining me. My name is Mitch, and we're going to talk about a couple of things. So, the stock market, the Dow was up about 400 in the day. By the way, you can't invest directly into an index, but you could invest into a security that tracks or mimics an index. Markets were up, backed off their highs of the day, but it's still a pretty good day. We'll take it. It's a follow through from yesterday's big day when the Dow was up over 1,000 points and the major averages were up about 2.5%, 3%. Excuse me. The NASDAQ was still up 2.5% today. So that is a really big day for the NASDAQ. So that's what counts. Why is that? Sorry. Why is that what counts for the NASDAQ? I'll tell you why. The NASDAQ had gone down a lot more than the Dow in the last month and a half, 2 months. So when you have a rebound market, it makes sense that the NASDAQ will go up more, will rebound harder than the Dow because the Dow wasn't down as much. So I'm not taking anything away from the Dow, just that technology stocks had a particularly good day yesterday and today, and that's going to lift the NASDAQ. So kind of a catch-up trade on what's been getting hit the most. The stocks that did the worst today were the ones that were perceived as safety, consumer staples, that sort of thing. Not that they were terrible, just investors bought those and they gorged on them because they were worried, but they wanted to be invested because they thought those would go down less or still go up or hold up better in a recession as far as their earnings and revenues go. But today, investors flipped the script and they decided to go into the more economically sensitive kind of stocks, which includes industrials and tech. And by the way, the Dow is up 1%. You say, well, that's the industrials. Not really. I'm going to give you the industrial sector as a group was up 1.25% in the day, and the Dow is up 1.07% today. So, the Dow is not really an industrial sector, even though they call it the Dow Jones Industrial Average. Companies like Microsoft are in it, Apple, Salesforce.com. It's become a little bit more tech centric, but Johnson and Johnson is in it. Disney is in it. These are not tech companies. So Nike is in it. So it's not nearly the industrial space that it was. I've long said that the Dow should really be called maybe the All American Company Index because it has companies whose names are well known, but it has nothing to do with actual stocks in the industrial sector. It started out like that in the early 1900s, and I think there were maybe 10 or 12 stocks in the Dow Jones Industrials, and they were truly industrial style companies. But it's morphed into 30 stocks and not an industrial average anymore. So it's more of an indication of investor sentiment than anything else. I don't particularly followed all that closely. I talk about it because everybody else talks about it, because you hear about it all the time. Oh, the Dow's up 1,000, the Dow's down 1,000. So that's why. All right. So what took place today? Well, last night Trump said he, after using I think Kevin Hassett is his main trade guy, said that the administration is looking for ways to get away with firing the head of our Federal Reserve, Jerome Powell. Getting rid of your getting rid of the head of your central bank, that's not a move that countries like European countries and America does. It's the thing that gives us strength and reliability and makes our economy strong is our adherence to norms and institutions. Okay, not some hodgepodge network of you know uh, policies that come and go at the whim of a politician to try to make things more advantage for his or her self. So we don't do that here. And I, Scott Bessent and others in the administration said, no, no, we don't want to do that. And Trump came out and said, no, I have no intention of firing Jerome Powell. Now, it's debatable if he could actually fire Jerome Powell. It would be against the law. But, maybe you could find some workaround or some wrinkle in some law that gives you an out. But it was a big worry for the market. It would be, in my opinion, terrible for the dollar, terrible for the stock market, terrible for the bond market, terrible for the overall economy. Now, we talk about the dollar all the time. And a lot of people are like, well, what's the big deal about a dollar? And if the dollar is weaker, it's good for trade. To an extent, when the dollar goes down, it makes our exports easier to buy from foreign countries. It's supposed to be better for our trade deficit. But the reason we have certain advantages of a strong economy and typically lower interest rates than we would have otherwise had over the last decades is because the dollar is a reserve currency. You can transact business anywhere in the world in US dollars, and most transactions in the world are converted into US dollars. That's why we price oil in dollars, for example. The global market for oil is priced in dollars. You pay your taxes with dollars. So why is a worry about the dollar, a sign of worry about the dollar, is the surge in gold and Bitcoin? Because if you believe the dollar is a safe haven and a place that is safe to keep your money in, because maybe you're in Europe, maybe you're in China, maybe you're in Japan, and you have your money in the local currency and you're worried about it, you want to move that money into dollars because a dollar today will be a dollar tomorrow. It will be around, notwithstanding things like inflation and interest rates, but it's a store of value. Now, you could keep your money in something more volatile like stocks or bonds or gold or silver or crypto. There's lots of places to keep your money. But if you notice something about all those investments, I said, they're all quoted in dollars as well. And the treasury market is $36 trillion. That means we owe $36 trillion of debt to the world, because we borrow money to fund our government, to fund our spending. Keep in mind that someone said, oh, and China owns all our debt. China owns less than 2% of all U.S. debt. Just want to clear that up. Americans own the overwhelming majority of U.S. debt, either in the people owning T-bills and treasury bills. Treasury bills are the main ingredient of what CDs are made out of. These are owned by mutual funds and exchange-traded funds and money markets. These are the things that you have your money in, okay? So it's really important that we take care of the dollar and the bond market. Now, I think the dollar is so big and pervasive, and our bond market is so big and pervasive that it forms a baseline for everything to be priced off of. So I don't think that's going away anytime soon. It's just that it's not as considered safe anymore. And I think that is in large part been happening for a while. as the U.S. borrows more money and the U.S. government is more, it was less thrifty, or, well, thrifty is not a word you should use with the U.S. government, but as we spend more and more money, it starts to make other investors worry about our accounting. Like, are you guys financially strong? The dollar has been downgraded. I'm sorry, the U.S. debt has been downgraded by S&P twice. Uh, Still highly rated, and we still have the power of the printing press, meaning that if all else fails and we default on our bonds, the U.S. Treasury is allowed to say print more. They'll print more dollars to pay back uh, borrowers, well, we're the borrower, to pay back our creditors, people who own U.S. Treasuries. If we ever get to that point, it's basically total global calamity, and the economy as we know it is going to be gone. And we are going to be suffering, and our biggest problem is not going to be the dollar or bonds. It'll be food and ammo. Okay. So we don't even want to think about that. That's real end of the world stuff. If we get to the point where the United States government actually has to print money to pay its debt holders because we don't have any other way to pay them back. But now when we owe money, some of the money that we're paying back is actually more money to borrow to pay back money that we borrowed. That's a bit of problem and a source of domestic dollar weakness for a long time. I think the Trump policies, though, have hastened it. And now it's like, we threaten we could default on our debt all the time. We print dollars all the time. The tariff policy has been horrendous, something like 95 tariff policies. That is making things worse and accelerating a lack of confidence in the dollar as the world's reserve currency. And it's not going to happen tomorrow that we get an end to the dollar as the world's reserve currency. I think we'd have to go through much worse things, and there's no one else that could take its place. Tina, there is no alternative to the dollar. So I want you to know that's what's happening. But the Trump policies have been seen mostly as highly erratic. And the tariff policy was based on trade deficits, not on actual tariffs. And it doesn't appear that any of his policies have been really thought out and planned. It's kind of like, oh, yeah, well, now we're going to build the wall 3 feet higher. Now we're going to raise our tariff on you from 50% to 100%. Oh, it just doubled again. Like, it's just like a mouth off process of implementing a tariff policy. This is not me being partisan, guys. I'm calling it like I see it. I call balls and strikes. I don't care what uniform you're wearing. I'm calling balls and strikes. This is like, it's almost like Mitch's independent news channel. But it's been really bad. Yesterday, the CEOs of Walmart, Target, and Home Depot met with met with the administration and President Trump in particular. And they said, the worry is we're going to have empty shelves. Fix the camera. The worry is we're going to have empty shelves. That's how bad this is going to be. And there is no more trade with China. With 145% tariff on Chinese goods, and China has 125% tariff on our goods to go there, there's no more trade. And then he was going to put $1 million or $1.5 million fee on any Chinese ships that go to port in American ports. These were horrible things. I've said before, tariffs have a useful place to encourage behavior, but this is just a severely overboard place. And I was really surprised how Howard Lutnick and Scott Bessent we're letting this happen, but it seems like they've gotten a little bit more spine, and now they're starting to take the lead and backtracking on some of this stuff. And I want to hand it to Trump. And I want to hand it to Trump. He backed off. He's backing off. He's going to do the TikTok ban. He backed off that. Good or bad. I mean, he has the authority now to do it. He's got the backing of Congress and the courts to do it. But He's backing off the tariffs yesterday. He said, well, maybe we're going to have to back off these Chinese tariffs and bring them down. And he's trying to be a little bit more amenable to China. But at least he's backing off. You know, he did the 90-day pause. You could call it a cave. Maybe he caved. But at least I think he's seeing that, wow, the markets have spoken, the economy has spoken, the experts have spoken. This is not good for anybody. It doesn't help manufacturing. It's not bringing back jobs. It's not doing anything that he wanted, except that we have already paid the price for his erratic policies. Even if he gets rid of all these tariffs now, we already have a price to pay. Less trust and faith in the dollar, and less trust and faith that the United States is a place to invest in. See, a strong dollar, a global currency, reserve global currency at that, means the United States is a good place to do business. It's a good place to build. It's a good place to invest in. You can't have that without confidence. And he's hurting confidence. And he's also pushing both our allies and enemies together, and now they're forming alliances. Right? And I think the view from the Trump administration of the global economy has been a very 1990s view, where we're the big cheese in the world. Everybody wants us. Everybody has to do business with us. But in 2025, we're not nearly as big a part of the economy globally as we were. We're still a big chunk of it, under 20% though. And, you know, a lot of other countries are doing a lot of business with a lot of other countries. This is something, by the way, that the United States wanted. We wanted globalization. We've patrolled the seas with our amazing Navy to guarantee freedom of navigation, freedom of commerce. This is a big deal. And we wanted other countries to do more and economically do better economically, because it would be good markets for us. And usually when you have wealthier nations, they want to keep the peace because they're living better and they have less incentive to not keep the peace. There's been a lot of advantages. I hear the disadvantages. I understand that our industry has been gutted, NAFTA, letting China into the World Trade Organization. I understand how these things have hurt. But I want you to know, whether or not we had these policies, eventually CEOs would have figured it out and moved their businesses overseas because it was just cheaper to do it. This didn't happen because of NAFTA. You know, money's been moving, you know, industry, textiles, you know, building materials. This stuff has been moving over to China and other foreign nations since the 60s. It started with made in Japan. I mean, if you recall, when I was a kid, made in Japan meant junk. Like junk. Today, anything made in Japan is considered quality. Canon cameras, you know, Toyota vehicles. This is good stuff, really high quality, right? Having said that, the dollar is a less attractive place to be. But the euro can't take its place. It's a diversifier. Well, maybe, you know, from a foreign bank or foreign company, I'll keep some money in euro denominated bonds, maybe Japanese yen denominated bonds and industries, and just plain old yen and euro. But their economies aren't really big enough to be a reserve currency, a reserve bond market. They have aging populations. Japan, Europe, and China have horrible demographics. We are actually much better shape demographically. It's interesting that those blocks are actually getting smaller. We used to worry about overpopulation. Now they're worried about underpopulation. It's really a completely different ballgame today than it was 20, 30 years ago. Rapidly aging populations. So having said that, if you want to diversify your holdings, your dollars, you can only buy so many euros, yen, and yuan, or the renminbi. That's the Chinese currency. So where do you go? Well, you put money in gold. Gold is all-time highs. I mean, it's just a massive amount of money going into gold, and money's going into Bitcoin. This is why Bitcoin has been going up, because people are looking to diversify away from dollar-denominated assets, including American stocks, American bonds. It is a sign that global investors are unasseting or taking their money out of U.S. assets, out of the U.S. economy, out of U.S. investments, and they don't know where to put all that money. So it goes to gold, it goes to crypto, because where else could you put your money? And that's why the dollar is a problem. That's why the euro. I'm sorry. That's why crypto has been so strong. Bitcoin has been strong. Gold has been strong. Trump is backing off the tariffs. I didn't think he would do it. I really didn't. I'm happy to see that he is getting the message from top CEOs and his own internal economics people in his administration that this wasn't working. Now they were applauding it; they were being good soldiers in his administration. But somebody's getting to President Trump's ear and saying, "This is not going to end well, politically, economically, in any way." I don't think that's a secret. Uh, but Trump has put himself into a bad negotiating position for us because once he shot his nuclear wad of tariffs, and then he's saying, everyone come on in and negotiate with us. Now he needs everybody to negotiate with us. Like before, it was like, you need the United States to negotiate with you. Now it's like, we need everybody else to negotiate with us. And a lot of countries are like, either don't trust the policies because, we could agree on something and 6 months later, even if we have a signed agreement, the president could change his mind because it's been erratic. We want consistency, not erratic. And China doesn't have an election in a year and a half. We do. So, I think that means China has a higher threshold for pain than we do. Americans have no threshold for pain. The economy's getting weak. All right, we'll just pull in our horns and we'll spend less. We'll live, we'll live a less quality standard of living. No, Americans, we want our higher quality of living. We want more stuff. We want our money to go further. We have no patience for anything but that. We're not accustomed to anything but that. And I just don't think the administration thought that through. And that's why they're backpedaling so quickly on the tariffs. They're leaving themselves open now to say, well, we'll cut our tariffs. I mean, one of the headlines today, I spoke to people about this yesterday. People said, no, really, that couldn't be true. Today was a headline in CNBC. Boeing sells airplanes to Chinese airlines. And they fly them to China. And then the airlines in China say, no, we're not paying for these. Take them back. And now Boeing has to fly these aircraft, $100 million plus aircraft. They're flying them back to the United States because China's saying, no, we don't want them. That's a really tough thing for a company like Boeing that is one of the biggest employers in the country, and it's one of the most important industries in the world. So I'm glad to see that we're getting back to where I don't want to say that. I was going to say we're getting back to where we were. We're not going to get back to where we were. I think we have damaged the dollar, the reputation of the United States. I think President Trump damaged his veneer of the great negotiator in the art of the deal by putting himself in a very weak negotiating position with China and other countries. And I think there has to be an acknowledgement. I think there has to be an acknowledgement that the U.S. economy is not what it was in the 1990s. We're still the biggest, but the rest of the world has caught up a lot. And I think that it's harder to play hardball like that. All right. So that's my story. This is why the stock market's going back up. Believe it or not, I'm not so worried about the stock market. I'm much more worried about the economy, jobs and artificial intelligence, because if you have to build more here, we're not going to build factories with gritty, dirty factory floors and put men on these floors with, like, forearms, gigantic forearms, and they're just pounding away at a red hot piece of steel. That's not really coming back. Everything is artificial intelligence, robotics. And I think that's really, if I had to put my money on something, I think, that continues to be the place to grow. The factories of the future are not going to be anything like the factories of the past. All right, I could go on, but I think I've said enough. I hope you enjoyed the show. We'll see what the rest of the week looks like. And we're hoping that cooler heads prevail everywhere. Thank you so much, and I'll be back tomorrow. Bye.